This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. You are listening to your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, and today is April. Today is June 22nd, 2020, and this is show number 60. So, Nick, the quadruple witching hour is over, and now we can get back to normal, right?
I hope so. Yeah, we could start looking at charts once again. I mean, it's really, really tough during an options expiration. I try to tell everybody that every week. You're going to get whipsawed. It's just what happens. And I'm so glad that it's over. That was really a time where you have to be on the neutral side. And we'll see what kind of chart patterns form now over the next few days or even the next week. That'll really tell us what's going to happen going forward.
Hey, what's the market doing right now as we speak?
Well, as we speak today, the Dow is up about 4 points right now. The S&P 500 index, when you look at the spiders, is up about 30 cents, and the Nasdaq's up 32 points at the moment.
All right, so we're still getting that little divergence with the Nasdaq outperforming the Dow, huh?
Yeah, the Nasdaq has definitely been the leader. Even today, we have a worldwide developer conference going on at Apple. So that stock, which is the biggest stock by market cap, is up about $5 today. So that looks like it's really the big winner. We also have a few other names that are out here that are positive: Google, Amazon, Netflix, and Invidia. But the reality of it is, it's really just a select group of names that are carrying the Nasdaq, and that's why we got to be a little bit careful here.
Yeah. So we're seeing a narrowing of the market rather than
that's right.
growing breadth.
Right. Yep,
So,
and a couple of weeks ago we were seeing a broadening of the market, which is really what you want to see for much more expansion and higher price action. Now we're starting to see things really come in, and we definitely have a narrow leadership group.
Yeah. So you think we're getting to the point we're going to see another decline, or what?
Well, right now, you just don't know yet because we're still holding trend. And as long as we hold trend, we always want to stick with that and give the market the benefit of the doubt. Now, in all fairness, we did have a big sell-off day on June 11th. We sold off with 209 million shares. Now, that could have just been an Options X shakeout, or it was something more pronounced. So, what I always tell my membership group is when you don't know, you don't do. And now we sit back and we observe what's happening, and we let the charts tell us more.
Yeah. Yep. That will make sense. So gold, silver, big winners today.
Yeah, gold's on fire today, up $25. Silver is also on fire, up another 1.5%. And when you look at gold miners, they're up big too. They're up 3%. So, there's continued money going into the precious metals. I like what they're doing. I'm not a buyer yet, but I love the pattern that's being formed here. I just don't want to see them break out too early.
Yeah. Yeah, well, it also broke in my opinion, what's a key technical resistance point, that 1750 mark in gold.
Yeah, well, you got that big level there, but if you go back to the pivot high from the April 14 top, that was around 1788. As long as we do not exceed that on a weekly close, we're still in the range here of consolidation. But gold is just nothing stopping it right now. It just continues. Every time it gets knocked down, and I think it's going to give us that setup, it just pops again. And, I don't want to miss this one.
Yeah. Yeah. But it's too early to jump into the party?
I still think it is. I still think it's too soon. I like to see more consolidation just because we've had a huge run up. And when you look at the bigger time frame chart, meaning a monthly chart, we have that big resistance going back to October 2012. And a lot of people don't realize that, but gold futures at that time got as high as 1798. So, again, that's still a big level to get through. And, I'd like to see us consolidate under that level first before we go attack it and get through it.
Yeah, and then once we go through it, that's kind of like all bets are off, huh?
Yeah, all bets are off till you get to the 2011 top, and we all know that was all the way up at around 1923. So there's a lot more upside there, and once that gets taken out, then there's there's no ceiling on gold after that. Sky's the limit.
So a lot more upside to come on that, and it's just a question of when we're going to be there, and probably sooner rather than later. But hey, that remains to be seen. We've gotten a pattern over the past few years where gold would start breaking out in the summer months. Unlike usually several years ago, it was kind of dead for the summer.
Yes, that is true. And sometimes when seasonality changes like that, it can stick around for a while. So we definitely just want to be aware of the pattern. I'd love to see it consolidate more. I'd like to see it consolidate for 2-3 months more. And then I think there's really no stopping it.
All right. So what about our other sectors, the home builders, travel sector, et cetera?
Yeah, the travel sector seems to have slowed down a little bit here just due to all the media attention about the spike in coronaviruses. So when you look at a lot of the stocks that I like to follow, like Hyatt and Marriott and all these stocks, they've pulled back pretty nicely, but they're on my radar. So I'm just watching to see what forms over the next few days, next week. But I'm getting excited about getting into these names right now. My wife, who is, loves to book hotels, we are seeing that every hotel we try to book for 4th of July, Labor Day, Christmas, they are all full already. So, these stocks pulling back, I think they're giving us some setups. The airline stocks, too, should be watched very closely right now as well, just simply because I'm seeing a lot of companies this morning raising capital. United Airlines, American Airlines, they're all doing these debt raises, and they're trying to bring some money in, and we'll see how that gets digested. So the patterns on the airlines over the next week or so will be very interesting as well. They could, if they set up right, they could lead to opportunities also.
All right, and that leads us to a question from a couple of our fans out there, and so one is actually on Southwest, and this is from Andrew W. He's learning about charts and volumes. He bought Southwest at 27, then sold at 38, but he's been watching during the witching hour. He thinks the volume at the end of the day on Friday could suggest an increase in price to $40 plus. What do you think?
Yeah, I actually kind of agree with his analysis a bit, but I think the pattern needs to form out a little bit more. So when I look at Southwest, it's my favorite of all the airlines because it's predominantly domestic. And when you look at a company like this, they have the least amount of cash burn, but the pattern is the best. So I like what he's looking at here. I think it needs a little bit more time. If you want to do this trade, do it with the call option, the $40, and give yourself out till, September, October.
Yeah, September, October, as you say, give yourself room because you never know what's going to happen. He mentions a stock that we were looking at earlier, Colony Capital. It's a $2 stock. It's yielding 17% dividend right now.
Yeah, anytime something yields 17% dividend, you should really be careful. Now, the stock has had a good run from $1.40 all the way up to $3.30. I think right now it's in the consolidation phase, but it's still holding up pretty well. There's also a short-term dash for trash right here, and that's what I think this is, a trash stock. So if you want to try to own it, put a stop below 220 and see if it can ride up to around 350 or so. Maybe you get that kind of a move, but this is not something that I could buy.
Yeah, right. It's a junk stock, basically, right?
Yeah. It's a $2 equity yielding 17%. That's a no-no in my book all the way around. I'll never trade anything like that.
Yeah. Yep. Understood. And then we had one other question from a listener, from Andy G, and he's really into the show, and he just wants to know a little bit more about your background and how you learned all this stuff and education, all that.
Sure. Well, I'm really self-taught, and I was a stockbroker for many years, and I became a stockbroker in the mid-'90s. But prior to getting into that, how I even became interested in the stock market, in high school, I was in this club, and it was like a little stock club we had in our business class. and the business class was called distribution. And my old teacher was Mr. Robbins, and he made us pick out everybody had to pick out 5 stocks. And I'll never forget the 1987 crash. All those portfolios went south pretty quickly. But I was very intrigued. And then about 1990, I had come down with believe it or not, I was diagnosed with a tumor in my chest. And this is how I really got into the business. I went into the doctor's office with a Wall Street Journal. And it wasn't a journal, the paper that I saw in the waiting room. I brought it with me, and I was always interested in following IBM and a bunch of different companies at that time. And the doctor saw me with the newspaper, and he said, "Hey, kid, you want a good stock tip?" And he gave me a tip. And believe it or not, I traded it with a buddy of mine, and we made about $10,000. And from that point on, I was hooked. Suffice to say, that $10,000 gain I made in the stock, I gave back about 6 to 8 months later and lost it all. So I am self-taught. I made every mistake anybody could make in this market. And like my mom used to say, why don't you go get a union job like your brother? And I was just too stupid to quit. And, eventually I learned that I learned about chart patterns. And as a stockbroker, you learn absolutely nothing about trading. You only learn about how to sell somebody on the next great cure for cancer. So I started to get into the stock charts. And when I would get a client on the phone, I would say, "Hey, pull up this chart. See these moving averages? See this pattern?" And that's how I got my business developed. So again, it was a long journey, and I'm trying to condense it as quick as possible. We might be able to write a book about this one day.
Yeah. So you started as a broker and transitioned to a trader, which is kind of interesting. So, because normally brokers don't really trade, like you said.
No, I mean, they're really very good salesmen. Some brokers I know to this day, I consult for many, they are pretty good traders, but the majority are not. They're going to really tell you about a story, and they're going to tell you about maybe a drug stock or maybe whatever XYZ, and they'll give you a lot of bullets of why you should own it. And hopefully you do business with them, and hopefully the stock works out. If it doesn't, they go on to the next client.
Yeah, on to the next and on to the next, and that's just the way the business works. So I guess we're going to have to kind of sit back, see what happens next here, what the direction is, but you're not overly concerned about a major decline at this point.
Well, I'm definitely on the more neutral side right now than I have been, just simply because I respect high volume moves. And we did have that high volume move on the spiders on June 10th. What was it? June 11th, where we had 209 million shares traded. Anytime you get a high volume decline from a high, you better be on high alert. But the trend is still up. And as long as the trend is up, I don't get overly concerned. I just let the trend tell me a little bit more.
All right. I think we'll leave it at that. So make sure you go over to Nick's website, inthemoneystocks.com. Check out his trading record. A lot of important info there for you that will help you in your trading. You can be certain of that. And, of course, the Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz. And any questions or comments, as you see, we answer all. Just email us, kl@kerrylutz.com. Nick, we'll pick up tomorrow where we left off.
Thank you.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.